Hi everyone, this is Steven. Welcome back. In this video, we will be talking about single candlestick patterns. Before we jump into the candlestick patterns we'll be discussing today, I do want to point out that the candlestick patterns, even though they're single candlesticks, they're always part of a pattern. We'll be talking about a couple of different candlestick patterns today, but remember that each time we look at the single candlestick pattern, it's still part of a pattern. One of the downsides of candlestick charting is that people who are new to it often see patterns where there aren't patterns. So take your time and make sure that each of the requirements are met to identify a pattern as we go through these single candlestick patterns today. So now let's get into it. The single candlestick patterns we're going to discuss today are all trend reversal candlesticks. The first one is the spinning top. It has a long, equal length shadow on each side and a small body. The doji candlestick has a small body, meaning the opening and closing prices are very close to each other. So the body is almost a line, a horizontal line by itself, and then either two long shadows or one long shadow. And then the hammer is a bullish reversal candlestick that reverses a prior bear trend. And if the candlestick were to appear at the top of a bull trend, the same candlestick would be called a hanging man and would reverse a bull trend. We're talking about the hammer that reverses a bear trend. It has a small body with a short to no shadow on top and a long shadow on the bottom. Both the spinning top and the doji represent indecision in the market. So if we're talking about a bullish pattern, then the stock has moved up. It has gotten to a price level where there are a fairly equal amount of buyers and sellers, and there's indecision as to which way the stock will move at that point. In each of these patterns, we'll be looking for confirmation before we trade. And in my example, if we're looking at a bullish pattern and we see a spinning top, that doesn't mean the next day we're going to go short the stock. You'll see the spinning top, and then you'll need to look for confirmation that the stock is topping and heading lower before entering the trade. And it'll be that way with each of the patterns we talk about. It's important to have confirmation, meaning the stock is starting to move in the direction you think it will before entering any trade. So now let's look at a couple of chart examples of each of these. The first chart we're going to look at is a chart of Target on a daily basis. Here we see the stock in a downtrend. And then we get to, on February 5th, a hammer. So we have a small body, almost no shadow on top, and then a long body underneath. The next day, we get a reversal in price, and the stock starts to move up. It is at this point, on the next day, or possibly the second day after the hammer, that you would place a buy order in the stock, with the hammer being your stop. The hammer shows that the bears were in control, drove the price down to a low of 54.66, but then couldn't hold the stock down any longer. As we can see in this pattern, the hammer held, and there was a very nice move to the upside in Target. If we had been trading the stock at this level on January 27th, this also may have looked like a hammer or another candlestick pattern that would indicate that the bearish trend had run its course. But as you'll see over the next 2 days, this did not confirm, and the stock trended down. That's an example of what I'm talking about, and that you need to have both the candlestick in particular that we're looking for, in this case the hammer, as well as confirmation the next few days after seeing this single candlestick. Now let's look at an hourly chart of Johnson & Johnson. We have the stock in a solid uptrend when we get a spinning top and then another spinning top at the top of the trend. This is followed by a bearish candlestick, and then a second, and finally a third bearish candlestick. So here we have a cluster of candlesticks, all representing a bearish top. But the first one that gets us interested in the stock here for a shorting opportunity is this doji at 1530. We're looking at an hourly chart here. This is October 23rd at 1530. So this first doji draws our attention, and then we see a confirmation as the stock starts to drop down with the next 3 to 4 candlesticks. The stock continued down. It would have been a very good short trade as the stock continued down to 139 from 144 on an hourly basis. So that's a doji or spinning top reversal. I'm almost using the terms interchangeably. As we can see, it's a very small body, which indicates there's price indecision at this point. Now, whether this is a spinning top or a doji is irrelevant in that we know the small price point represents indecision. Let's look at one last chart of eBay. The stock is in a bullish pattern. This is a daily chart. And then on July 20th, we get a clear doji. Look at the long shadows and the very slim horizontal line. So the opening and closing price, which we can see in the upper left, the stock opened at 37.17 and closed at 37.18. So literally there's 1 penny difference in the opening and closing price after the stock had traded up to as high as $37.48 and a low of $37. So this would definitely have gotten our attention as a possible shorting opportunity. And then we look at the next day, the stock's down, and the next 2 candlesticks we have a down pattern. If we had shorted the stock at this point, we would likely set our stop at 37.17, the price indecision point for the doji, and we would have made a nice short gain as the stock traded from $37 down to $34 here on August 21st. So that's the Japanese candlestick doji reversal pattern. Thank you for joining me to talk about single candlestick patterns. In our next video, we'll be talking about double candlestick patterns, and I look forward to seeing you there. Thanks.